Let's bring in our next guest who remains constructive on Japanese banks. With us now is Makoto Kuroda, Japan financials analyst at Goldman Sachs. Makoto, great to have you with us here in the Tokyo studio.
Thank you. It's a pleasure.
So let's talk a little bit about what happened with the BOJ and how much more of a boost that could give to Japanese banks.
Sure. So BOJ has raised the policy rate from 10 basis points to 25 basis points yesterday, and additionally also decided to reduce JGB purchases by 3 trillion yen per month in 2 years. And so the impact this has on the banks is quite significant. It means wider loan deposit rate spread. It means higher JGB investment yield. All told, we think that it has about 20 to 30% profit impact in the medium run.
When it comes to the portfolio management for the banks themselves, because of the debt purchase reductions from the BOJ, are we going to see them switch to JGBs more?
Yes, the shift from cash to JGB is certainly a driver of higher asset yield for these banks. And moreover, the JGB portfolio has been reduced by the banks in preparation for this rise in yields. So they're hungry to buy more JGBs and at higher yield. That's certainly a large component of the interest rate sensitivity of banks.
Do they have enough assets to do that, or are we going to see them pull money from overseas perhaps?
No, there's sufficient cash on the balance sheet. The loan deposit ratio of these banks is about 60 to 70%. Under the years and years of quantitative easing, there's been a huge buildup of cash on these balance sheets. So there's plenty of room.
What are the risks in terms of seeing the Japanese economy, for example, given higher rates? If we see a hit on Japanese consumers, on investments, could that be a downside risk for these banks?
There's some discussion of the impact of higher rates on the consumers and corporates. However, this is by and large a relatively unlevered sector of the economy, and the rise in yields, especially at these current low yield levels, is unlikely to impact the debt repayment ability of these players.
What are your expectations when it comes to, or I guess assumptions when it comes to where the Bank of Japan goes from here and the rate picture and how that affects mega banks in particular?
Sure. So notably at yesterday's BOJ, the policy statement mentions that the BOJ remains on a tightening path if the growth and inflation conditions discussed in the Outlook report remains fulfilled. That, we think, means future rate hikes. We forecast a January hike of 25 basis points to be followed by semi-annual hikes thereafter. And what that means for the banks is, again, continued rise in TIBOR, lifting floating rate loans, but also short-term prime rate is a new development. Mitsubishi UFJ Bank has lifted its short-term prime rate for the first time in 17 years yesterday. If that is followed by other banks, that could have a potentially higher profit impact that market hasn't priced in.
Norinjukin is a cautionary tale in what happens when you bet wrong on interest rates, right? What are you watching out for in these numbers? And do you see that sort of thematic being a risk for any of the other smaller or regional or rural banks?
Sure. So I think you're referring to the downside risks, which is the unrealized loss on bond portfolio. However, the banks have certainly had expertise to build in the last 10 years in terms of the interest rate upside risk. Durations have been reduced, hedges have been put in place. Relatively, the banks approach this juncture with a pretty clean balance sheet.
When it comes to all of these financials across Japan, we have seen, broadly speaking, a lot of optimism about the stock market because of corporate governance, perhaps some cross-shareholding unwinding as well. Is that what we're seeing in financials as well?
For sure. There's been cross-shareholding unwinds taking place since about 2014, but right now it has accelerated because corporate attitudes towards cross-shareholdings has really begun to change. So the banks are reducing cross-shareholdings by about 10% a year, and there's some upside risk to this.
What was really interesting was how the U.S. election has also played into the banks, especially in 2016 with the election of Donald Trump, for example. Topic's banks index actually gained ground. Tell us about the link here of how this translates into some support for Japanese financials.
Sure. While the outcome of the U.S. election is still uncertain, we have the example of 2016 to look back at. So in 2016, the bank shares, particularly Topic's Banks Index, rose about 10% in the literally 2 weeks after the elections, and then 30% in the months after the elections. And this was one of the strongest outperforming sectors of Topic's. Some of this was driven by expectation of regulatory deregulation in that time in the U.S., reading across to global banks. There is a somewhat read across to be made for that theme this time, but it's also coupled by this very favorable interest rate environment.
What are the risks then?
The risks to the bank thesis is probably widespread global economic downturn, or perhaps more aggressive U.S. rate cuts than expected, but the thing is, the bank's guidance already expects a certain number of U.S. rate cuts in this midterm plan. So there's a lot of buffer to the guidance.
Makoto Kubota there, Japan Financials Analyst at Goldman Sachs. Really great to have you with us today.